we now take a look at brewing in Africa with Maciek Szymanski, an analyst at African Alliance Securities. Very good morning to you, Maciek.
Good morning, Samantha.
Let's take a look at East African markets here, because I think that's where things are shaking up quite significantly after the unwinding of the East African breweries and SAB Miller's gentleman's agreement, and that, of course, paving the way for SAB Miller to take East African breweries head-on in the home Kenyan market there after the acquisition of Crown Foods and water and soft drinks bottling business. Just give us a quick overview of post this agreement, the markets and breweries that both these breweries now have exposure to.
All right. Thank you. East African breweries, previously the strongest base and still currently the strongest base is Kenya. The addition, what is going to have, the business is going to have a 20% that it's going to buy from SAB Miller. It's the operation, is the minority interest it did not own before. So it's actually strengthening its Kenyan business, which is actually dominant part of the group as a whole. And SAB Miller, as you mentioned, they have bought Crown Foods at the end of last year. It might seem to be a bit strange, but SAB Miller is known as one of the largest Coca-Cola bottlers and soft drinks distributors in Africa. So from that point of view, it looks like a first entry into the market and trying to understand the market and position itself in a position where it can compete quite effectively.
Now, SAB Miller tried to get into the Kenyan market before but failed dismally. What's going to be different this time around?
Difficult to say. I think the times have changed. In 2001, when the sort of first beer wars were happening, I think Africa was a very closed market. Most consumers looked on South African companies investing or entering markets as foreigners, colonizers from the south. I think that attitude is not going to be there this time. I think you're actually going to see a much better approach in terms of how SAB goes in entering the market, and actually in terms of multinationals, I think multinationals have been driving the consumer brands. These days you actually don't care in most cases where the thing is made. You care about the value that the product offers. And as we know, SAB Miller has tremendous brands in its portfolio.
Let's take the conversation back to EBIL then. Those full year results match anticipated by the market. Of course, key earnings drivers still the Kenya breweries and UDV Spirits. Yes. Those were key drivers of profits in 2010. We've had the drought this year, and of course the new Alcohol Controls Act. How are these expected to feed into earnings?
Yes. Yes, the results are coming out on Friday morning, so I think it's been sort of widely anticipated or widely expected in terms of what the numbers will be, because there are quite a few questions about the nature of the consolidated financials. What is the contribution of Serengeti, which is the Tanzanian business, and as you mentioned correctly, Kenya right now, the key market is definitely under some pressure. Alcoholic drinks regulations, they have curtailed to some extent how you can trade or how you can advertise alcohol, but this is not news. EABL is part of Diageo, which the global company. They do follow responsible marketing and practices. So,
and an issue that most breweries are faced with around the world. Now, Kenya Breweries is said to need around 10.8 billion shillings to buy the remaining 20% stake in Kenya Breweries, rather, from SAB Miller. Now, if you just look at what Tanzania Breweries is based on, valued at around 67 million shillings. So it's going to need quite a significant amount in order to purchase this remaining 20% stake. Traders are concerned about where it's going to get this money from. Have you had any clarity from management in terms of how they're looking to raise this capital?
That's one of the questions, I guess, which we hope to be answered on Friday. There is a gap, there is a funding gap that EABL requires, and One easy way would be to cut dividend, but I think as I've traveled around Africa, I know shareholders like dividends. So you buy a sort of bellwether stock often for the cash flow that you get from the company. So I think the opportunity that's going to be there, it's most likely more debt funding, potentially some equity raising. EABL is squeaky clean. It hardly has any borrowing. So from that point of view, it's a blue chip customer, which everyone would in the bond market in Kenya or all the banks would scramble to fund acquisition like that.
Ethiopia is another interesting market, with it being the second most populous market in Africa, 85 million people there. Heineken's recently entered that market through the acquisition of 2 smaller breweries. Just give us an idea of what's taking place in the brewery sector over there.
Ethiopia has been a very secluded market, as you might know. It is the government is still sort of pseudo-Marxist, I guess, to some extent, but they have embarked on ambitious privatization drive. The entry of Heineken is into the brewing space is actually quite key. The only incumbent right now, the global incumbent, is Castel, which operates in Africa with SAB Miller. So you have 2 of the big 3 players there, and everyone was expecting that EABL would be in Ethiopia as well, but we've actually seen a few months ago where Diageo, the parent company, preferred to bid directly. So I think they're seeing huge opportunity, and I'm not sure if they're trying to cut out EABL out of the action, but definitely Ethiopia, with a huge population, with per capita consumption of about 3 liters, which ranks one of the lowest in the world. I guess it shows that government selling beer is not the right way to go about things.